Hey everybody, April 17th, 6:45 p.m. Eastern Standard. We're going to do a PPT weekly recap. Okay, so you can see my screen right here. I'm on a daily chart. We're going to look at it from multiple time frames, right? This is actually an interesting time to be showing it because it's actually testing right now. It just actually had the first probe near the top of the bear flag. Now, is it just a bear flag? It's acting as resistance. That's our main thesis. No, it's that in context with some other things that I'm going to show you. Right? It's the fact that that this is a bear flag within a downtrend, which has greater odds to be a false breakout than an actual balance breakout when the 200 hadn't been penetrated and confirmed because we were still in a uptrend where every short intermediate term bearish bias can be neutralized by a bigger picture bullish bias that could then turn it over. But in this, it's the opposite. We have a bigger picture bearish bias that can then turn over the seemingly bullish short and intermediate term. This is the last, from here to here is both a short and intermediate term, and it's up. But it's now in a longer term bear flag in the context of a downtrend, right? We're also testing. See this dotted green line? It's just I should draw a zone there, but it's essentially right. We're testing this low and here, and then we finally take off. So it's and right here also. It's a key zone, so very important there. Now we'll go on the weekly. So we just showed a bear flag. We showed the context of where we are potentially for multiple time frames within the bear flag. And then we showed horizontal resistance as well. So now going on to, I didn't really want, let's see what I wanted. Up a time frame to a 2-day. This is still, it's hard to push this there because oh my God, this feels like the only piece of data to be looking at, right? What I like about this going down here is it's in alignment now with these time cycle shifts. Like this really does early May, May 11th, actually, that week, the second week of May predicts that it's going to be some type of inflection point. And just knowing how quickly the downtrend is versus how much longer in time it takes to go through a sideways phase. I mean, this does align with it pretty well that we would have for the rest of April a downtrend. Now, I don't want to be married to one idea because I'm asking myself that. I said, hey, you gotta have a plan where what you think is the higher odds scenario becomes invalidated because you got to be able to. You can't just sit here and not have an invalidation point. Now, there is key, what I consider key resistance. If you take Monday 2024 to here, didn't quite get there. Right, we are on the 2-day chart approaching, pretty strong resistance as this is hitting. So what I'm trying to show you is that while the intermediate term, the short term prices are rising, the momentum is not. So that's not a sign of strength. That's essentially a warning sign that as this is making higher highs, higher lows, in this time frame, this momentum, which is multi-years, is not picking up the pace. That's a bearish divergence. So that's one thing that we're looking at, also in line with the time cycle. This is the 2-day. So we have that to look at. Let's look at it from a different vantage point. We can go towards a weekly, and then go somewhere else. Right. So yeah. So we just went from a daily to a 2-day. Now we're going to go to a weekly. Right. I'm doing a top down. So even though I started on a higher time frame and zoomed out, you should start on the highest time frame and zoom down, but I'm kind of doing it anyway. I'm not starting on the 15, right? So as this is popping up here, right, this is a key moving average that indicates this larger time frame bearish bias. It's the 21 moving average. And as you can see, we are coming right up into that, which could act as resistance. What we do have in the CCI is some separation, right? So for some inverse zero line rejects, there is this yellow overshoot. But I would like it to have been like this, where the momentum's so weak that the CCI can't get over the zero line, but the turbo has a huge overshoot. So there still is a separation, but not as pronounced. Here's an example. I'm just trying to show you some examples of inverse zero line rejects, but there was a CCI overshoot. Kind of this one a little bit. Mostly you a little bit here. You want it to be below it, so that's a fact. Okay, so we got the weekly, we got the 21. Okay. Now we'll go to the 60. We'll go down a little bit now. We have some horizontal resistance here at 78225 and 79416. And then we go on the next time frame, the last short term, and then we go to the intraday time frame, which is who's in control of the day, which clearly, right? You'll get a sense of who's in control of the day after the first hour of the regular trading hour from 9:30 to 10:30, because you have the overnight and data. Odds based thinking that 70% of the time, the higher the low is in the first hour of the trading day. That's a key source of your edge to help you gather who might be in control. So I had a resting order at this zone and overnight, and it kind of, when I woke up, I kind of saw this as it was rising up. So I had a decision to make. I'm like, wow, okay, that wicked in. I'm in profits there. I could have went all out thinking, okay, well, we got this zone here. Maybe the short-term bias will take us up a little bit. But I think I did go all out as this was coming up, right? I felt like if this was really going to be a reversal pattern, it shouldn't do a double top up here again. But at the same time, for some reason, as this was coming up, I saw this pull back a little bit. And I kind of was looking at this pulling back a little bit near the zone, and I shorted this aggressive because it wasn't even near the low, the actual low of the day. So it was ahead of the zone, stopped behind it, took a loss here, is what it is. That's trading. But look, I would rather have taken a loss here than deal with the fact that this could go higher. That's what you got to do. It has to be a key source of edge in your system, and you got to take it well. All of these arrows have been winners, so you got to look at it long term. So I just gave you a vantage point from multiple time frames that the bear flag, that we're still in this downtrend. Let's look at it from a timing perspective that an indicator might be help us with as well. Right. So here's a chart we're not on that chart yet, but we came to this, right? This was a key swing, went down, couldn't get to it down, right? Ended it down. And now we did break above it. So this is, like almost like right? This could potentially be that bounce breakup. But keep in mind, right? These higher highs and higher lows, there's also this directional trend line. So if we can close up here, back up into this, anywhere into this, below this especially, right? That becomes a false breakout confirmed pattern. Now, why are we getting a pullback here? Even though it looks like we broke clean out of this, it's because if you look at it from, like I said, who's been really in charge, it's been the bears. So when you have a key pullback, namely here and here, a key pullback in the context of a bear market, if we zoom out again, you see that, we're bear, right? One leg down, sideways, then your second leg down, right? That we're still in a bear market, then that, any resistance back up into these larger time frames becomes really important. So yeah, we're at a super important inflection point right now where if we hold and stay above this, then it becomes a bounce breakout pattern, and then the bulls can take it almost 100% of this range, which is a substantial move, right? Maybe this becomes the anomaly, the lower odds one. But if we can't, and we can start to see signs of weakness here, this becomes then a false breakout, and then we can have a huge move down, which I've shown you some charts that might indicate that. Okay, so I showed you that, but let's go to the indicator now that I wanted to show you. Okay, so just to get a sense of time, we've spent this much time so far in the red phase of the Gaussian channel. It doesn't really matter the height as much right now. You can visually see if price is moving a standard deviation or two away from the meridian line, the middle one. So it would be like if the bear market ended when we started to reverse after spending this much time. I mean, look how much more time this bull run needed to mature in order to get that rounded bottom and that golden cross. So this would be the anomaly as well. Also on this weekly, you can see the separation here, but a strong, like when this phase of the false breakout, there was a clear, very easily seen inverse airline reject, right? Then we broke down strong, hook from extreme. Now we start to go sideways. Now we're doing that rising wedge or bear flag, whatever you want to call it, false breakout or breakout, however you want to view it right now. It's not confirmed either way. But even on this attempt, right, there was a very pronounced, very strong inverse, even more so than this one, the general reject. This one's like a ugly one that kind of broke through. So I just wanted to point that out again. Get rid of these guys. Okay. Once again, if we clone how much time we've spent under the Gaussian channel and compare it to the cycle previous from the previous cycle, 2 cycles ago, once again, it would be a super anomaly to have such a short bear market. If to go up right now, I'm looking how much more time to spend. We'll get rid of all these because we'll just update them. Just the visual, once again, it would be very short. Once again, it's 3 cycles ago and getting towards the beginning of the beginning of the beginning. And once again, it would be the shortest cycle that we've ever had. And so that means that the bear thesis is now more in alignment with the Bitcoin time cycle chart that hasn't failed us yet as well on the weekly with those half moons of 30 weeks. So I guess I should have had it like that a little bit more that way, but let's see, did I get it right? It was close enough. Close enough that we spent that much time. So here we are at an inflection point. So I mean, how do we do this? If you didn't reload yet or you're not half off or whatever, then excuse me, what we have to do is we have to have confirmation of the charts now. I mean, it's not the ideal trade location, but to allocate now when you're at the potential reversal point of the final bear thesis before you know whether it breaks out or not is not smart. What you need to do is you need to have an insane up candle, right? And then it needs to pull back into the previous trend line area or the screen support confluence area, aka spend a little bit of time at the very least above there. So it's not just some whipsaw, like an overshoot. And then, right? Because even if it goes up a little bit more and then quickly goes underneath this, if it does that, then it's a false breakout underneath this. That becomes invalidating. It's still underneath it. We need to break above it and spend time above it, and then the portfolio can be the lower odds scenario we can go long. But as far as saying that this is the bottom and now, you'd be only valuing this amount of data, and you'd be ignoring all the momentum indicators that show that momentum is weakening. Oh no. Yeah, all I wanted to do was get rid of that. There we go. So that, yeah, just a quick market update. Doesn't have to be a long one today. Sorry for the delay, but no one sent any questions in this week, so I don't have any questions to answer. But the other thing, oh yeah, one other thing I wanted to give you a hint that I think we looked at multiple time frames, but we can look at the intermediate time frame, which either on the 2 week or just look at the last 2 weeks worth of data. And yes, we've been making higher highs, one leg, right, two, then three, right? That CCI has not been making higher highs, so it's a bearish divergence of a time span since April 7th. So I mean, that's 10 days. It's not something to ignore. We've been making higher highs in price, and the CCI has been making lower lows. So that's a weakening sign of momentum on the immediate time frame. And just to reiterate on this weekly, which maybe you'll be able to see better on a 2 day. Yeah, see, I have to, depending on which chart, you're either testing this trend line or the other one looked like it was breaking it. Those are both 2 days. Let's just take a look at why the index is making it seem like that. Okay, so I guess I had it a little bit lower. Okay, that's a little bit better because it takes it to 24. Doesn't need to be quite as high up here. It's kind of not relevant, but touch. And so it's weird. The index, the 2 day index has shown this as a clear breakout. However, this weekly Bybit 2 day has shown that it's not. That doesn't make any sense. Other than it's just not as much data on Bybit, but it's looking at the same span of data. Okay, so I have it till November 24. I'm wrapping up here. Sorry if I'm in and on a little confusing note here, but I got to figure this out. May 25. Oh, that's why. Okay. It doesn't take this one. You got to take that one into account. Because it did predict this high area, then this, right? Then you could match it to here. That's how I got it. Okay, then you could match it to there. This is almost like a lower. Okay. So this is the final straw. Okay. I'm not trying to curve fit it to my beliefs. I got to be careful, but I just want to, the more touch points I have, the better reference if you have it here, you have it as a little bit of an overshoot. If you're taking it, this is the final be all. Yeah, so this is it. The show will go on. This is the inflection point and potential important area in the market. If it turns here, right, then we have the May 11th time frame of next month coming up very soon as when the low will occur. So Friday, got a little bit more data, and hopefully this market recap is helpful. You guys know where to find me. Over and out.